Hey traders, good afternoon. It's about 5 o'clock in Chicago. We are on the 8th of December. We're going to begin our macro coverage in here. We're going to talk mostly about the SP 500. I want to take a look at the counts and also at some measures of breadth, volatility, and sentiment to put the whole market into, just into an overall picture. I think we've had a pretty decent day today. We climbed about, 75 basis points on the SPX. You could see the RUT about 63 basis points in here. The NASDAQ was a little bit stronger, 1.2, and the Dow Jones about 0.5%. On the first place, at least on my macro watch list, we had China, which was an advance of about 3.2%, followed by semiconductors. Even the ARKK stocks have enjoyed here a little bit of a rally. The count here, I don't think it's valid. I'm going to have to modify that. And then, more yen, looking pretty good in at 1.7. Then we had natural gas climb. So it was a little bit of a bullish market with a little bit of a sell-off in the dollar, about 32 basis points. Energy continued to push lower. We're breaking below this trend line in that DBE. I continue to stress the short opportunities here into the energy markets. Then you have USO, which broke lower again. And then obviously the VIX with a little bit of a retracement because, we had a little bit of a rally today. So you can see that's the VIX. This is the market volatility index of the S&P 500, looking about 30 days out. And then you have the VXN, which is the NASDAQ volatility index as well. Then in terms of yields, we went up a little bit in yields, which means that bonds dropped. So anywhere from the 10s, a little bit up, 349, about 2.4%. And then a little bit of a drop also in, in the bonds on the 30-year, and then a rally up here in yields, 1.7%, trading at about 345. And then in terms of the sectors, you had industrials rallying today about 2.3%, and then XLK, XLY. So a little bit on the more risky side, risk on, consumer staples here at the back with financials, and communication and energy. And then you had some ETFs in here, SMH, IBB, so a little bit of a biotech, a little bit of a semiconductors, this kind of water, clean energy trade that we're continuing to stay short, a little bit of solar in 10, but, no big moves. Out of them all, like the SMH was the strongest one, Nvidia with 6.4%, Qualcomm 3%, Adobe, Cisco, Oracle, Apple, Microsoft. So obviously the market enjoyed a little bit of a move today. In the retail, you see Etsy here, 3.2%, Amazon as well. And the pot stocks, I know I got a little excited about them, but guys, you have to be a little bit careful here because, it looks like we're having some failures, and I think we're going to make new lows. We were kind of led to believe a little bit in here that this breakout might have a little bit of a lag. We never really broke the neckline on YOLO. Which is, I think, the lowest market cap anyway. But if you look at MJ, when something like this happens and then you're falling back, you got to be careful. If you're starting to break below 78.6 of this entire rally, I would suggest that you revisit that thesis. CGC looks a little bit better. Again, just a 78.6 pullback here starts to look dangerous that we're going to break lower. And then the same for Tilray. We did break higher, failed, and then came back. So we got to recognize this and kind of take action. But it doesn't look like, it looks like a pretty big failure. So especially if the market turns sour, you have a big support at 314 in Tilray. Below those levels, I would not be interested in owning it, at least for the moment. MSOS, kind of the same story, right? Just went up, broke above there, and then crashed back lower. So that's the story of these pot stocks. Very volatile and prone to failures in this downtrend. It did look for a while that it has some kind of an inverted head and shoulder in here. It could still work out, but just pay attention on the 78.6, because if we're getting back above that, let me just quickly measure and see if we can. I think we're below that already. Retracement, high to low here, right at 78.6. So this is a big level. You got a couple of touches right back in here. So 10, below 10, these things could be in trouble. That would be my stop if I was long this stuff. And then, reinitiate on, on a reversal higher. But that's kind of where we are at the moment. All right, let's take a look at SPX, and we're continuing to follow this market down through a series of lower lows and lower highs, thinking a B wave completed up here. I've set into the updates, and now let's follow the price action since that high. I'm going to go to a smaller time frame up here on a 45-minute chart. Let me reset the spacing in here, and then you can see that we sold off in this 1-2, and then we gapped down a couple of days back on December 1st, and went back up higher, and we created another second wave. So 1-2, 1-2, then you have the larger third of a third wave. That's the decline. That's the biggest since the top, so we have to identify that as a third. I think that's pretty obvious. And if I'm going to a 15-minute time frame, we're noticing that since this wave 3 low, the market has not developed an impulsive action. Now, it's very important here that we're holding this 39.79 for a fourth wave pullback, because that's kind of what you want to see in a fourth wave. Now, if we're measuring this, in a 1, 2, 3, 4, I think this wave 3 is bigger than 1. I'm not measuring that, but it looks like it is. And that's a fourth, and that's a fifth wave down. You could allow this market to travel all the way back to the prior fourth wave swing high. It's at 4,001 exactly. That's near the 50%. Anything above those levels starts to be very problematic for this being a fourth wave, and we would have to think at this market in a bit of different terms. So for right now, this movement here looks pretty good. It looks like, it's choppy. It appears in 3 waves. If he wants to do one more push, that's fine. If he wants to go, let's say towards 50%, you can also get the help of some channeling in here. You can kind of channel the top and then project that from the bottom here. And, let's say I might change the angle just a little bit. And, this can travel up here into the 50%, but anything above that, I think it starts to be problematic, and I would not press my luck on the short side if this thing continues to climb. I don't think you can count this as a, in any shape or form as a completed impulse, because it doesn't look like one. So I'm going to stick with this, that this is a fourth wave in progress, and pending a movement, above 4,000. If we're getting above 4,000, then I think this fourth wave idea will start to be invalidated. I'm repeating the same thing. I think at the larger degree, we're still going to get maybe a drop, and then another fourth wave, and then another fifth to complete a wave 1 decline. That's kind of what we're following this this movement from from this high. If you put the channel in here, you could see that we have broken below that. Right up in there. So this was kind of the climbing channel. You can go from the top of the wave A right there, and then wave B failed to reach up the top. That's a 1, 2, 3, 4, 5, and you broke below this wave low, which is the first indication that this uptrend is finished, and we're beginning the next lower sequence. So I'm gonna go with that prospects for right now. Let's take a look at the 5-minute chart in here just really quickly and see how this looks. So we have what it looks to be, maybe a diagonal in a wave A, down in B, triangle B wave in here, and then, a push higher here in this. Could be a 1, 2, 1, 2, 3, 4, 5, 4, and 5. So this could be just a simple A, B, and then up in C. That's the impulse down. That's the correction higher, and we should be doing 2, 3, 4, and 5 to come back tomorrow. Down into these levels. You could see in here these lines are the dailies. So we opened up this morning, we dropped down, we closed the gap, and then we rallied, but we weren't able to do anything sustainable in there. So I'm going to watch that very carefully, kind of how we're doing tomorrow. I'm also kind of watching this type of a channel right here and see what this whole thing means. You know, we'll see if we're going to break back above that one, and then, you know, it could be just an ABC, you know, big X wave and another ABC up into that 50%, again towards that $4,000 level. All right, so this is just a little bit of a touch on the S&P 500. And before I jump over and take a look at the other you know, measures of the market, some of the internals, breadth, volatility, and sentiment, I want to touch a little bit on bonds. And, you know, we're going to take a look at TLT here, and it's trading right now at about 109.14. Let me go back to the wave count. And I'm going to go down to, let's just kind of hold it. I don't know, did I place the wave count in here? Yeah, I did. Let me just place it back here on this as well. So what we're doing here was we're monitoring the fourth wave. And, you know, we can give it room to develop. You know, let's just do a simple math in here, and just, you know, pull up a fib, a retracement fib from the top of the wave 2. And then from the top of the wave 3, right, to the bottom of the wave 3. And we're looking on the price scale. So this is the arithmetic scale. We're looking for a retracement towards 116. That is 38.2% here. Near 116 levels. These levels are very important, you know, kind of up into that neighborhood. We should be failing up into those levels. If this is correct, then we should not overtake that in TLT. Now, you know, that means that the bonds continue to climb higher, yields will continue to drop. This does not look like a completed move, so it could be just a simple ABC, maybe, and then you're going to come back with an X and then another ABC, or it could be 1, 2, 3, 4, 5 for the wave A, and they have an impulse, and then you're going to come back down and do a B and then do a C for a very simple zigzag in the market. So that's A, B, C, either as the entirety of the fourth wave, or as you know, as the first section of it, if this wave 4 wants to become a little bit bigger, right? If for whatever reason develops into some kind of a triangle, depending on kind of, you know, how this A wave continues to unfold in here. So going to a 1-day time frame, we're looking at this as a 1, 2, and then wave 3 in progress, 4 and 5 for this wave A intermediate back in there, and then you have the minor development. So we're still, I don't know if I have access to the 1 hour charts in here. Let's see. 1, 2, and then you have a 1, 2, 3, 4, 5. So that's your wave 1. Then you're coming down in 2. Then you have another 1, 2. So let's see if we can do the subdivisions in real time. I haven't looked at this market before at the smaller time frame, but let's just kind of play that. So we'll have 1, 2, gap in 3, 4, and 5. So that's the top of the wave 1. It's very small pullback in the wave 2. And then you have another 1, 2, 3, 4, 5. So then you have another 1, 2. So 1, 2, 1, 2. Let's just do 3, 4, and 5. So 1, 2, 3, 4, and 5. So 3, maybe a fourth wave forming. So this is at the minute degree. So that's kind of what we're going to be watching in here. Let's see, you know, and then again, you can calculate this fourth wave. You can go to about 105 in the pullback, no bigger than that. If it gets bigger than that, we start to have problems. There's a small fourth wave in there about 105. So if you're trading bonds or TLT, that's kind of the roadmap on that. It's a good market. It's not super volatile, and it's you can see it's pretty clean. And then you should get another fourth here with another 5 to complete a wave A top back into those kind of 115, 116 areas. If this market sells off below those levels, below 50 to 61.8, then I think we might have just an ABC completion out there. So we're gonna continue to kind of monitor this. Okay, let me just jump over on you know, some of these measures that I have on here. And we're going to take a look at sentiment. I have a folder where I'm watching sentiment. And I know there is talk out there that, you know, people are bearish or people are bullish or whatever, you know, but these are just general statements. You know, you gotta have a little bit of a backup on that and just, you know, try to come up with with the indicators that show you kind of where the market is positioned, or at least, what's happening underneath there. And there's no better, I think, charts to look at that. For example, this one, it's the, the Sentiment Active Investment Managers. This is basically the National Association of Active Managers, right? It's the name index. And basically, it's pretty much telling you, what percentage allocation, these investment managers have to the equity markets. And it varies, right? It comes to all the way to 0 here. And then it goes up to 100, even, above 100 if they're probably over allocated or whatever. Now it's been declining, since the top, since we had this bear market, but every time you had a big low in the market, their exposure was very, very low. You can see they're almost 14% at some point, 12%. So almost they were not in the market, as we were making these lows. Now you could see in here that they started to buy the market, right? They're starting to get excited about maybe finding a low. And if anything, I mean, we're still declining, but you can't really say that people are bearish here, because actually the investment managers are actually, pretty bullish up here with the percentage allocation to the market is about 65%. Also, if you look at the bottom here on the Ridex flows, so this is a separate class of funds, I think, that's called Ridex, and then, they have a bunch of stuff, and they do these reports that come out, and every time they're down here in the negative, right, they're just people are kind of flocking to safety, and they're selling their these funds and going to cash, and you can see like major bottoms have been formed, and I've talked about this before. Maybe I don't show it every single week or something like that, but I put it into my presentation maybe on YouTube. But you could see how deep we were, and this is what I mean when you say that people are bearish. Well, this is as bearish as it gets. Now you're coming back. Now you're kind of cleaning up that bearishness. If anything, the market is kind of more relaxed now. It's more kind of maybe not necessarily fully on the bullish side, but it's maybe kind of neutral. So that's what's going on with this, index. Then you're taking a look at the, AAII measures, right? The American Association of Individual Investors, and they're pretty much getting asked if you go on their website, hey, are you bullish? Are you bearish? They take this every single week. I think it's on Wednesday, and listen, it's they've been also extremely bearish, but this level of bearishness that we were at, this haven't been seen in, like, I don't know, 30 to 40 years, whatever. I think very long time. And this is obviously the spread between the two. And here you can see, the kind of the positioning, the overall positioning. Now, sure, there's still, a bit more bears than bulls, but that spread has been climbing, right? Which means that, more and more people are getting less and less bearish by this moving to the upside. So they're getting less and less bearish as we're coming into the 200-day moving average, into a pretty good retracement, kind of following this B wave. So again, not a big evidence of people being super bearish, right? So that's kind of what we have on this kind of sentiment. Then, we can take a look at the CBOE options, put and call ratio. This one is a little bit more iffy. You have to, really be into the options market to kind of understand how this works. I don't fully grasp it myself, but because there was a lot of, selling of puts, buying of puts, and they all kind of get into the same category. But here we're pretty neutral. We're at about 1. You still elevated here when you look at call to put ratio, but you kind of have to be, up, and this is the 5-day moving average of it, right? We're just kind of try to clean up some of that noise, and you have to be up towards 120, 121 to be all the way strongly on on the bearish side, and to be, and those usually appear near kind of the lows in the market. These kind of high levels of put and call ratio. So not necessarily complacent. We're not down into these levels, but we're not super bearish either. So that's another kind of point here that I wanted to make on that. Now let's also take a look at some of these breadth indicators. Where I'm bringing the argument that, the latest rally in here was kind of running on fumes. I showed this before. This is the upside down volume ratio. As the stocks are moving higher, and the New York Stock Exchange, NYSE, you know, the level, the volume that comes up into these stocks, it is declining as they're moving higher, right? So it takes a lot more money to be put to work, a lot more volume to be put to work to raise those stocks higher. And this has been declining ever since we started to kind of climb up here. Now, the advanced decline ratio, it's pretty flat. It's been kind of oscillating. There's not like a huge divergence in here. It looks like we're dropping slightly. You know, we've had them a little bit better before, you know, like back into this swing high, you know, when you had this advanced decline up here and then you drop lower. So there was a big divergence. So this is the numbers of advancing issues versus declining issues that, you know, that they're looking at it every single day. And, you know, this one, it's not trending up in any way. It's just kind of diverging as well. So this is another indicator, you know, of kind of what's happening, you know, underneath the surface in the market and kind of what brings kind of forward the bearish argument. And then, you know, we can take a look at the McClellan oscillator as well. So again, just a measure of market breadth, right? Just the difference between the number of advancing and declining issues. You can see in here how they're declining. So it's pretty much, you know, the same chart, a little bit plotted on a different, you know, scale in here. And then you have the summation index below. So, you know, these breadth indicators are also telling you that, you know, we're not necessarily having a super strong market underneath the surface. Then let's take a look at a little bit of volatility, you know. And volatility is, and we can go through all of these, and I'm looking at the rate of change of the VIX in here, and, you know, we just had the kind of the largest one in a long time here, about 8.8%, you know, a couple of days ago when we had this kind of first climb. Now we're coming back lower, you know, but again, VIX is climbing from a big support level. Then we take a look at the VIX versus the SP500, just kind of the inverse relationship back in here. Not much to see on this, just, you know, some of the kind of high extreme levels, you know, where you can get, you know, pretty big market bottoms. But take a look at the volatility index here on the NASDAQ. You know, we're basically, again, coming back towards a very, you know, big support in here. And we're just bouncing from there, right there. You know, so I can almost plot another line. Let me just do that. You know, I just do another line in here, and I'm just going to go, it's just a horizontal line. Just going to plot it right there. And you, look how many times this touched towards the highs. Let me just kind of save this. And, you know, you can see it back here in, you know, April 4th. Down here, right at the top, August 15, you know, right again, right here, right, December 1st, December 2nd. You know, so I am expecting, you know, a return to volatility into the NASDAQ, and the way the prices are kind of behaving in here in this, you know, very kind of choppy structure, that tells me, you know, that there could be a sell-off here coming. I mean, things kind of line up in here. So, again, I'm just, you know, trying to build some arguments, and from kind of what I see on the charts, you're looking at the VIX, volatility index, you know, this is the front month versus the back month, you know, you're looking at the, so VXV is the 3-month out, and then VIX is the front, and obviously when this is kind of towards the high, now it's, you know, a little bit towards the middle, so again, there's not a huge, because I also looked at, you know, the rate of VIX, the VIX Central there, you know, the forward curve, and that's still, you know, pretty, you know, it's pretty steep. I think it's in a pretty good contango. Let me see, is it here, the term structure? Yep, you know. So it's still, you know, very low at the front end and higher at the back end, which is kind of how it's supposed to be when you have a market that's more relaxed and not necessarily not built up with fear. When you start to get a lot of fear in the market, then the front end starts to be very expensive, and then the back end starts to drop. So that's the backwardation. And, you know, right now people, I think, you know, they still seem somewhat complacent, but this is going to spike if we're going to start to break to new lows, or to start to kind of get some aggressive selling. So from that aspect, this continues to look pretty good, and I wanted to just kind of show it to you in here as well, but this is a little bit different. It's just kind of looking out 3 months, and again, just shows you at the front end, you know, if you're kind of coming up to this, you know, higher levels, you're going to find lows in the markets, and then, you know, as you're coming kind of back down into these levels, you know, when you get very complacent, then you kind of get tops. So not a lot of signal out of this. And then, you know, the next one here is the inverted VIX, which we kind of broke back above this trend line. you know, with the markets kind of selling off, and you know, we're still kind of heading lower the way it looks, you know, which means VIX kind of pushing higher towards 24, 25. We'll see how this is, but this is just their inverse relationship where I'm kind of looking, you know, kind of how it looks every time it spikes into some of these trend lines. And then VIX of VIX, let's take a look at that. And you know, the volatility here again, just like I showed you in the term structure, is still very low. We're sitting at about 84.90. This is the volatility of the VIX. And, you know, you really wanted to get, you know, start to climb higher in here to get a little bit of a deeper sell-off. But for right now, you know, it looks like the markets are in a holding mode. And I know why. Because, you know, we're having a big week next week, and I think the market is preparing all its ammunition for that. And then we'll see. Either we rally and we go to the moon, or, you know, we're going to take the next leg lower. So guys, I'm going to have a sip of coffee here. I'm going to jump over and take a look at the Bitcoin charts. In a video, we got stopped on a short little trade we had. Bitcoin tried to rally a little bit today. I think it's going to fail, you know, but we'll jump on that and take a look. You know, other than that, maybe a good movie tonight or something, and we'll be back at it in the morning around 5 o'clock, 5:30. You know, quick and early with coffee and getting ready for those charts. All right, guys. Thanks, everybody. Bye-bye.